giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, well, I don't wanna jinx it, baby. Can't twist myself at the spine. Don't wanna overthink it, baby.
Well, hello, and how are you all doing this Wednesday, June 17th? The first meeting for Kevin Warsh as the Fed head. They will be live at 2:30 p.m. Eastern Time. Bob, can you close my door, please? Good man. Poopus, leave, buddy. We're going to stream right now. We are streaming right now. All right, Poopus, go. So, at 2:30 p.m., we've got the FOMC first meeting at Kevin Warsh. At 2 p.m., though, is when we have the announcement that they're gonna pause, you jabronis. What do? We look at the PDF statement. So until then, we're gonna hang out. And then after the 2 p.m. to 2:30 p.m., we're gonna just hang out. Andrew Butcher says, just received my mug. Choo choo, Ms. Nachos. Love it. That's right. I've got more mugs here. I've got Choo Choo, more HODL ones, and a special one coming next week. You're gonna frickin' love it. They will be live at 2:30 p.m. Eastern Time. Super G says, what's up, Klaus? Thanks for all you do, brother. I'll tell you what's up. I got a nice, easy 15-mile ride this morning. I've got some heat training to do, and then I got to hit the gym after dinner. We're getting ready for a 24-hour race. So how am I doing? Feeling strong. Still feeling strong. Hi, Klaus. I'm having a pork chop for lunch. Speaking of pork, I'm curious to hear what Kevin Warsh has to say. That from New York comment. Let me know also where y'all are watching from. Very curious. Warsh is going to pause, right? We all know that. The market's pricing it in. Not a big deal. What does Kevin say? Is he going to be more optimistic than Powell? Can he be more optimistic? I mean, it's kind of hard when we have, inflation biting us in the beehole, right? So we got to keep that in mind, too. How optimistic can he be? Certain markets are doing very well. SpaceX, if y'all want to fucking take a quick look at that. SpaceX under 200 right now. It was under 190 earlier today, making a move back on up. Like I said, you're going to expect a lot of volatility with this. I didn't want to get in on this. I already have a whole bunch of risky plays. They're not making any money. A lot of this is hedged on AI. There's other ways to play the AI trade. For me, I'm more interested in where does this settle, right? After this initial, kind of excitement fades off, where does SpaceX end up? Klaus, you should come to Florida for heat training. Dude, I go in the hot tub all the time, 104 degrees. It's just like going to Florida, isn't it, Tim? Sorry, that was from a plumber 78. Tim says, Ola, give me that red, baby. I need a shirt. Got those coming. We will be working on shirts. I just want to make sure they're not cringe. Y'all have seen I've taken my time with this, but I have done it right with the merch stuff. Like, the laser engraving on the Choo Choo mug is effing awesome. The crypto nods on the HODL mug with the candlesticks on the back, right? Kind of like, it's very clever. It's not cringe. I just didn't want that for the merch. JOX007 says, I bet SpaceX settles at 85. That would be crazy. That would definitely be crazy. 100 I could see. 85 would be kind of hard. Looking like Slim Mean Machine Class. Yeah, I'm putting a lot of work in. That's from Jay. We all know Jay. Thank you, Jay, by the way. Wow, that rhymed. Yeah, I'm feeling pretty good. I gotta be honest with y'all. I'm able to put myself through a lot right now, and I'm not getting roasted. Yesterday was a really, really tough day for me. Okay, so I raced, quote, on Saturday. I trained again on Sunday. I took Monday off. On Tuesday, which was yesterday, I got up, worked. I did a bike session, right? A pretty good bike session for like an hour and a half. And this was outside. And then I did a good running session. I got a bunch of miles in the morning. And then I did a second bike session, a hard one, It was a hard 15-mile sprint I did at night. So I did 3 separate sessions yesterday, and I mean, I feel pretty good. I got to do a double today. That's the deal. I'm feeling well. Black Gold says Kevin Warsh will be positive. He's been groomed better. I don't know, like how. I mean, I get that he could be positive, but you got to remember, like the inflation is still bad, right? Let's do this. Trading economics, inflation data. Okay, trading economics. Where do I have it? I usually have it up here. Trading economics, inflation data. There it is. I don't know why it was all the way at the bottom. Usually it's pretty closer up there. I mean, you've got inflation roaring back up, so you can't be like too optimistic. I guess it's more, are we going to see this go away quicker, right? Is the Iran situation going to help out? We still have food that's super expensive, right? That was happening before the Iran thing. Housing super expensive. That happened before the Iran. So we still got a lot of problems. Still got a lot of problems. Tyron Copeland says, don't tell me Kevin Warsh will be late to the party like Jerome Powell. That's what I'm hoping in terms of something different. I'm hoping that Kevin Warsh in this generation of the Fed is a little bit faster reacting. It's not going to happen right away, right? You don't want to shock the markets whenever you're new to something. Whenever you're new in a leadership role, the first thing you want to do is just observe. Just see what's going on. Talk to people, right? Get the vibes. You don't want to make massive changes. That's not a really good leadership thing. And that's what Warsh is doing. He's providing leadership for the Fed and hopefully guiding them to reacting quicker and not being always late to the party. Jerome Powell. Larry Barron says, I love you, Klaus. Is there a I say lots of naughty things mug? Yes, Larry, there actually is. There will be, just like this blue and white one, there will be a red and white mug where it says, I say lots of naughty things on one side, and on the back side it says, and here's your warning. And the naughty and the warning are both done in red font, so they pop out. So it's a naughty warning. See, I told you, I tried to make everything clever. That should be here next week, my guy. So yeah, when I get that in, I'll pimp that out to you all as well. Why? Because I think this is cool stuff. My wife's pissed though because I did not save one for her. Just throwing it out there. I told her, I was like, you could buy one. She didn't like that answer. I'm ready to go with all this, and how are you? I do believe that the price is baked in for this rate cut, okay? Clarity Act being delayed, I think you'll still see more red because there's still some optimism in the market, right? Not that there's a lot of people that believe, but there still are some people that are like, you know what, we're getting it done. So when you crush their hopes, it's like just another wave of money, another wave of people that get kind of pushed out. This is normal, though. I've seen this in plenty of markets. .com shook out a lot of weak hands and shook out a lot of weak companies, right? What did the .com boom tell us? The .com boom, bubble, and bust taught us that, yeah, you can be cool in a new industry. But after a while, being cool only does so much. And what's the best thing to do? Make money, because that's what businesses are all about. So yeah, this is very much like the .com era. I've seen this play out before. And what happens is this. Companies, projects, businesses, people like you and I will survive if you are diversified and understand what the hell it is you're getting into. Because when these markets, like, because not every player in AI is going to make money. Right? It's not like they're all going to be... No one's really making money with AI right now. We just talked about SpaceX and how much money they put into their AI. They spent $12.7 billion on AI just in 1 year, in 2025. And they only made $3.2 billion on AI. If the hold is priced in, what would happen if he cuts rates? Okay, if he were to cut rates now, the market would go greener than you've ever seen. It would, like that, everything would pop freaking deep in the green. Because cutting rates is good for a risky market. Crypto is very risky. And when you're in something that's very risky, same thing. SpaceX is on the riskier side. Why? Because they're losing money. That's a risky proposition. You don't know if they're going to turn around. You don't know how long it's going to take for them to turn around. You don't know if they have to sell more stock to raise more money to do it, right? So the point is, risky markets, you have to know what's up. You got to know exactly how to get through it. You're going to have to know that not every player is going to make it. Not every AI player is going to make it. Not every crypto company is going to make it. Not every energy company is going to make it. Diversify. Make sure that the books you're looking at look good. Andrew Butcher says, I will be purchasing. I appreciate that. I think Andrew is talking about the I Say Lots of Naughty Things mug that's come out. I should have it next week. It is going to be so cool. That I'm going to keep a bunch for myself because I do say naughty things, and I think that's a really good mug for me. And even if I travel, I might have to take one with me. Nicholas Myers says, tell your wife if she buys the cup, she's helping the show sponsor, keep the show sponsor free. No, I did. I told my wife, I was like, dude, well, if you want a mug, you could buy one. And the funny thing is with the merch, it sold out in under 3 days. Yeah, oops. I guess I underestimated how much y'all really wanted cool stuff. And that's my bad. So I even admitted I made a mistake on that. Worse though, is he going to make a mistake and keep on the legacy of the previous Fed and always be late to react, late to raise rates, late to cut rates? Can Warsh really cut rates anytime soon? Right now, the market is saying, hey, guess what? In December, by the end of the year, we are going to be looking at rate increases. 60% chance that we're going to have one increase by the end of this year. 40% chance that we're going to pause. That is nuts. I want you to think about that. That is a different game than what we were singing a few months ago. So you got to pay attention to these macros. And that's going to be a hard thing to sing when you've got inflation roaring back up. We were going down here. Check this out. I'll put the 5-year up on the screen, right? Nasty inflation during the Rona. We got it all figured out. Things started coming down. We started having some decently low months here and there. Things were really moving down right here. And then all of a sudden, the last 3 reports have ticked on up. Lauren, what's up, Lauren? Says, Warsh knows what's up. Positive vibes, positive speech. I think he's going to be very optimistic. I really do. There was no love lost between Powell and Trump, right? That's not a picking a one side of the aisle thing or the other. That was just facts. Neither side were really too happy with each other. Their relationship soured over time. At first, they were pretty cool with each other, like during the first term. But then, it just went a little bit south. Warsh, Gesundheit. Nice. I like it. Thank you, Renee. Love that German little knowledge in there for you. So that's the deal with Warsh. Now, it is 1:59. Let's keep flipping this right here. We're going to see what they say. We are looking for this meeting right here. And remember, this will have the summary of economic projections, where we get to see like the dot plots and so forth. So we get to see if the entire Fed is maybe a bit more dovish or a bit more hawkish with everything that's gone on with inflation as of late. What if he changes how he calculates inflations and says we need rate cuts? Would Warsh be a jabroni? Yeah, I don't think it's smart to cut rates right now. Seriously, we don't know if the Iran situation is completely done, do we? No, we don't. You can talk deal all you want, but until stuff gets signed, and not only till stuff gets signed, but stuff gets actually like followed, you're gonna have just another poker in the fire of what? Of really scary stuff. What if a lot of AI companies start going under? We're starting to see a lot of crypto companies go under. What if the AI bubble starts breaking? Not just the valuations of the stocks, but companies completely going under. Bryce says, I think he's going to hold today, but don't be shocked if Kevin cuts rates. I would be absolutely shocked if he does. And here we're going to find out. You ready? Let's do it, kiddos. The committee decided to maintain the fund rate. So he paused. I'm going to put that in the chat. Here we go. Kevin Warsh and the Fed paused. There you go, chat. I let you know, and I let the viewers know. So they paused. So part of the problem is again, inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. the committee will deliver price stability. So that's kind of the big thing too. If inflation is still up, it's hard. There you go. Unchanged. Pause, pause, pause. Yes. Now, don't react. I'm telling you all this right now. I've been doing this for way too effing long, okay? We've been doing these live streams like this for years and years and years and years for the Fed stuff. Do not watch the initial candlesticks. The initial candlesticks on the 15-minute chart are going to give you an overreaction or a misreaction from the market. You got to wait a day for everyone to digest the data, for everything to kind of pass on through, and that's the real reaction. Trust me on this. Do not freak out on short-term price movings. Don't do it. Yes, pause is here. Majestic 420, shout out to my peeps. Majestic 420 says enforcement should be interesting. Yeah, how do they enforce the Strait of Hormuz? Is that done diplomatically? I don't know. Like, that's just kind of weird, right? Like, how do you make sure that the sides aren't being naughty? We were supposed to have a ceasefire for weeks and they were still lobbing shit at each other. So I don't know. Let me get a quick drink. If y'all out there, make sure you wet the old whistle too. Getting a little bit of hydration in. Paul Fish says, BTC just dropped over 500 in seconds. Watch it bounce back. And that's my point. Don't overreact to the initial candlesticks. Let everything digest itself. What you want to pay big attention to is what is the volume of the market, right? Because the volume of the market is going to tell you the interest of people at that moment, right? It's important because right now there is like no volume in the market. $71.22 billion. That sucks. That is super low. That's fucking weekend numbers on a Fed Wednesday. Yeah. So what you need to start paying attention to more and more is any sort of volume movement that's volume of interest. Interest on our side, not downside volume where everyone's dumping the shit out of it, that people want, like, the action. News that, like, brings in stories, right? We gotta hope that something big comes out here for crypto soon so that we can start regaining more of the capital, more of the spot volume, and more of the attention. Otherwise, you're going to have other things like Anthropic come out, just like SpaceX, and pull money out. Just putting it out there. Lauren says he did not raise. There was a pause. White in Vermont says, what did I miss? Jerome Powell, pause. Oh, gosh, I said Jerome Powell. I've been doing this for too many years. Kevin Warsh and the Fed paused. We're going to hear from Kevin in his first FOMC meeting here in 26 minutes. Until then, it's open questions. What do you got? Questions, comments, you do it. Ask it, I'll answer it. Tyrant Copeland says, here comes the red candles. Just don't overreact to that. Pro Pocket Watcher says, I need that under $1 action. XRP can go under $1 if Clarity Act, like, hopes completely get crushed for this part here. Crypto itself, right? Zoom out further. Crypto itself can go deeper in the red if not only do we lose clarity, but if all of a sudden the House goes Democratic and won't want to give Trump family any wins for crypto. And remember, we never got the ethics stuff figured out. That would crush hopes even more. So there are some downside risks out there. Now, that being fair, there's been a ton of Democrats that have been pro-crypto. A lot of times, though, they vote up and down party lines. We kind of get that, right? But they are pro-crypto. Senator, what was it, also Brooks? She was one of them. She's a pro-crypto Democrat, but she's like, yo, we got to make sure we do this right. So there is support on both sides of the aisle, but there's also a lot of players on the one side that just don't want Trump and his family to make money on crypto, and they know the Clarity Act would do that. Sell the news, buy the rumor event. I don't know. It depends. Is Kevin Warsh going to be, like, cool about this? Is he going to be hard? I don't know. I mean, okay, this meeting is a little bit different than most, all right? This meeting in here, let me go to the sheet for you. This meeting has an asterisk next to it, okay? Those asterisk ones, right? The reason they're super important is because they've got the dot plots. All right? And the dot plots and the expectations from the Fed are really, really important. Like for here, they expect unemployment to pretty much ease over the next 3 years. Nothing crazy with that. They do expect inflation to go down, but you see there's a big gap right here, and I'll make it a little bit bigger for you. There's a big gap right here on what the expected ranges are from the Fed. Going on right where target rates are. Look at this. You can see there's still a trend to bring rates down, but look, it's a little bit longer in time. The majority of the Fed still sees rates a little bit higher. Look at this, right? These are some bigger numbers right here for this latest one in 2026. That's a big number right there. So just there's some expectations from the Fed, and I think that's something that is going to take like a bigger oomph over other meetings here. Because this isn't just Kevin Warsh, it's Kevin Warsh and all his other friends. Each one of these little dots represents it. My readout on the mic is completely juicy, my man. I've got a pretty good feedback monitor here. Let's see. He's on in like 23 minutes. We're going to cover it. So the dot plot is what he's going to talk about. And that's something you need to pay attention to as well. I'm going to zoom in just a little bit more so you can see this. This is going to be a big point of today. These dot plots, each one of these dots represents a vote from a Fed official on where they think rates are going to be. Okay? 2026, 2027, 2028, right? Look at the number of people that believe rates are going to be higher. There's a pretty big constituency here. You even have some people right here. Look at this. 3 players are thinking above 4. Above 4 even in 2027. It's not until 2028 do they believe that everything, as in like everyone's vote, would be under 4. That's crazy. The only Ervizo, hopefully I said that right, says, "Hey Klaus, greetings from Arizona. Can you do a video about dividends? I know you did one in the past, but just recently, but a lot changes in 7 weeks, and I feel like I'm still shooting in the dark." Yeah, done. Totally easily to do. One of the things we talked about was Whitehawk. This is a new dividend play. They did it a dividend as a private company, and then they raised capital as a public company. The reason they raised capital as a public company, expansions, merger acquisitions, infrastructure, and so forth. When you look at something like this, and I'm just giving you the tip right now, when you look at something like this, you want to make sure they're spending money effectively. IPOing is not a big deal, okay? They were making money. They were private. They were paying private dividends. Now they're public. Now they're paying public and public dividends, trading publicly. So we look at their books. We see how they're using that investment money. Because if you're going to go from private to public, you're going to expect some growth. Otherwise, what would be the point of doing it? If a company's making money and you're making money year over year over year, the only time you want to take on any sort of quote debt or dilution, right? I'm using that right there, both interchange, is if you really want to expand. So we got to watch stuff like that. Yes, definitely do a dividend speech. That'd be cool. And you do, Paul Schaefer says, that'd be cool if you did a video on some nice different sector yields for different stocks. Oh, of course. We could go into the banking players out there, right? We could tie this into the banks. The banks have yield, but the banks have struggled with growth lately, right? The bank's yield has been there. It has been strong, right? And people feel very confident with that. But the actual growth of the asset itself has been a little bit on the softer side. We could also go over real estate as well. Real estate's got some pressure to it. Now, there's certain rental ones, right? Where you're like, okay, you're making the money from the rental stuff. I get that that's cool. But, commercial you got to be careful about too. A lot of commercial vacancies. He can ease inflation in strategic ways, just not rate cuts. Lauren, his tool is basically cutting rates and his forward-looking tone, right? There's 2 things that affect the market. What is going on right now, and how do we feel about the near-term future, right? That if the market knows that, hey, it sucks now, but near-term future is going to be great. The market looks forward. The market's like, okay, we can digest this shitstorm and move forward. But if it crap now and the forward look is kind of meh, neutral, negative, it's like, okay, we're stuck in poop now. We got to go more into poop. So there's two segments to it, right? What is he doing for rates right now? What's the lag effect on those rates? And you get my point. Hopefully that answered your question, Lauren. Do I ever watch BCB? What's BCB? Just a BCB. Am I missing what the acronym is? David Jones says, WHK isn't showing dividends from what I can see. That's because this is brand new. Like WHK is brand new. You zoom out to their all-time chart. Yeah, it doesn't make sense in this because guess what? They've only been around for like a week. Yeah, seriously. They were a private company that has gone public. They paid the dividends privately, right? They had their private shareholders, and now that they're public, they raised a bunch of money. It's another energy play. 7.7% yield. My thinking here is growth would be low to moderate, but stable and very market resistant. They do a lot of stuff with natural gas, and when natural gas was in like nasty prices last year, I think it was last year, they still paid. They still paid and made profit. So you just got to pay attention to that. So yeah, this is a new one. That's why you don't see any D's on the bottom here, because this is brand new. Not a brand new company, but they're brand new as in publicly listed. They were private before. So yeah, I think we'll keep expanding the coverage of what y'all are into. I mean, what's my saying? You, the viewer, matter most. Well, you, the viewer, tell me what you want to see the most of, right? I mean, if a certain sector is kind of cool, we could cover other hot sectors, right? Oil was hot for a little bit, but now you see it's starting to cool off. Energy plays are going to be strong for a while because this is still positive revenue compared to the expense that they've put in. So this is going to be a net gain for the energy industry here. So yeah, we could definitely touch on a bunch of things. BCP, blockchain backer. Blockchain. Okay, yeah, see, I don't know what all the damn acronyms are. Let's see. Blockchain backer. TA guy on YouTube, not hype, hopium pusher. Yeah, I have seen as I've scrolled through, but I haven't like watched a lot, if that makes sense. I try to make sure that I keep myself like not isolated from stuff, but like I want to make sure that I keep my own style and I don't take other people's takes. I really try to give credit where credit's due. That's why like on the bottom of all the videos in the description section, there's actually like all the links cited in there. And like all the time I say, oh, this is from Eleanor. Like I make sure I try to cite as much as I can. Like I cite everything, but I want to make sure I give props as much as I can because the number one, people deserve the credit on that. So yeah, I try to keep my point of view a little, you know, like kind of isolated. Tyrant says, I just checked my stock brokerage account and I'm only down $51. So I guess everyone's waiting to see what he's going to say. Yeah, we'll see what he's going to say here soon enough in 16 minutes. Let me get another quick drink here as I did train earlier today. Nick XRP says, just curious. You and him have been the most consistent and I appreciate it. Well, thank you, Nick. I appreciate that. I've tried to been like super consistent, bringing in news like pretty much every day. Philip Ryan's in the house. What's up, dude? How are you doing? He says, sup, bro. What's interesting about this whole Kevin Warsh thing is you have several layers to his decision, okay? So you've got the first obvious layer, which is short-term inflation bump, right? Which came from what? Which came from the whole Israel, Iran, United States thing. But before that in here, you still had inflation that was just too high. Housing, way too high, right? Cost of food, way too high. Beverages, way too high. Building materials, way too high. Vehicles, way too high. So we had problems even before this latest flare-up. So Warsh is going to have to peel back that. He's going to have to help peel back the problems from this. The problem is if Congress doesn't do anything to ease up some of these roadblocks, we're going to be dealing with this problem for longer. So Warsh, he could cut rates, he could be more optimistic, but he still needs help from the people in Congress to get stuff done. Housing, even Powell couldn't do anything about housing in the Fed at that time. So just putting it out there for you. Powell, like we saw, housing just ended up being out of control. Housing is still out of control. When you go on the CPI data things, yeah, it was energy the last couple months that pushed it up. But they keep saying that shelter is freaking abhorrently high. That's not what we want. Let's see. What did I do for work before becoming a famous YouTuber? I was a corporate guy for manufacturing, high volume manufacturing, quasi high volume manufacturing. In the same general industry my whole life. I took over the family's business when my dad got really sick, which was tough. I did that early on. I stayed in the private sector for a long time. Then I worked for a public company. Did well there, and doing this now, and I love this. I absolutely love this. I get to take my experiences from that realm and tie it in here. That's why we do deep dives on financials. That's why I pretty much can tell you this or that. With the SpaceX numbers, I just pay attention to it. And definitely not a famous YouTuber. I'm just a normal person. I'm no one famous. I could walk up and down the street. I could walk up and down an airport. Ain't no one gonna recognize me. Like, just throwing it out there. I know I'm no one cool. D. Scotty says, I've been in crypto since at least 2012. BC backers shilled all the time and pretty much took the vulnerables for a ride in his group. Maybe early on. Like, and there were a lot of people that did that. BitBoy did that too, right? He was one of the big ones out there that just washed a bunch of people. Let's see. What are we thinking? We know he's going to cut, but is he going to be dovish about this? Are we going to see any sort of spot volume reaction to this? I mean, spot volume has just been poop sandwich, man. Like, that's your spot volume. That shows you the interest in the crypto markets that you and I like to play in. It's been poop. There's poop. Lauren says, is there a price you would hop in for SpaceX? No. Reason is because SpaceX for me is still an AI tech, like high growth sort of thing, right? They're going to benefit us of massive growth. They're going to spend a lot of money to grow. They're going to try to do as much as they can to grow AI, grow space. Like, they're going to just try to grow. That does really good in low rates, and we might have higher rates for longer, as I showed you on the plot chart. But I also have so many things that fit that in my portfolio that I don't see room for another one. Right? I mean, like think about this. SpaceX is like a risky tech company. Not like, it is a risky tech company. Doesn't make money, a lot of risk, a lot of reward, a lot of drama can be tied in with Elon Musk. You saw with Tesla, people got pissed when he had certain alliances, and people were like, oh, your Tesla's a piece of shit now. And the share price went down. So there's a lot tied to it. So for me, it doesn't fit what I'm looking for. What I'm looking for right now, more than anything, is I want growth with yield. Okay? Because if the market's going to be a little hotter for longer in terms of inflation, I want to protect myself against that. If rates start coming down, yeah, you can start taking a risk here or there, in my opinion. Maybe you can open up a little bit bigger positions if all of a sudden things are looking really dovish and it's like, dude, we're going to be staring down the barrel of like 3 cuts here in the next year. Yeah, then you could start sliding a little bit more into growth because it's going to be cheaper for those growth companies to expand. Trick dropping Trick memberships. Trick dropping gift memberships. Thank you very much, Trick, and a bunch of people appreciate that as well. I appreciate it, kind sir, and I appreciate the 414 of you watching. So no, when I look at SpaceX, it comes down to the same thing. What are companies' books like? Right? That's a big one. What are on the books? Are they making money? Is a big chunk of money that they're spending on something super risky where maybe it doesn't pay out? We've seen companies make bad moves before. Remember when Pepsi did Pepsi Clear? Oh, this is freaking awesome. We're doing Pepsi Clear. And then all of a sudden, like, it didn't last. Why? Because it didn't sell. So companies don't always make good decisions. And there is a vulnerability with Elon Musk. He's a very public figure. When very public figures, right? When very public figures start doing stuff like this, think SpaceX IPO before it launched, Warren was like, hey, SEC, halt this shit. We don't want this. We don't want this. We need to, like, you're going to always have people coming after you. So why would you take such a public risk for something that you could take the same risk with in other AI plays that aren't in the IPO sector right now? For me, I'm also wondering what a lot of these exchanges and Bitcoin miners are going to do. To be honest with you, there's a lot of smart business people in those industries. A lot of them. And they can turn companies around. So I might play a few beat up mining companies that got revamped with management. Like if I'm going to take a risk, I'm going to take a risk like that. Or a miner that diversified. Or exchanges that are diversifying where they're getting their income from. So that they can be like, hey, look, we can weather any sort of negative storm. That's why I brought up the whole Whitehawk thing. When natural gas prices were like super, super low and companies weren't making money, they were still paying dividends and making money. So if they can find a way to make money when times suck, they're going to make boy band money when times are good. Those are the kind of things that I'm looking for to fill right now. Any thoughts on Triple V Venice AI? No, I mean, AI is AI. And I don't mean that like in a lazy just slap it answer. It's just like with every AI project, you got to like really dig into it, man. Like you really got to dig into it. And you got to see what's behind all of it. Some of these AI models you can already tell are not going to do it. They're not going to make it. There's not really much of a demand. The tech is cool, but if there's no demand, again, they're not going to make many. Let's see. Champs Exterior Seamless is lunchtime here, Wyoming. Thanks for the good news and your opinions. Lots going on right now. Going to be fun watching everyone come together later. SpaceX to use XRP on Mars. That's from Bread Garlic House. I cannot tell you how many people I heard say that. Well, who's the other guy? The Stellar guy. What's his name? That he was going to use XLM when he did his Mars trips. Jed McCaleb. When Jed McCaleb did all his space shit, yeah, he was like, oh, they're going to use XLM for that. Yeah, I heard that. Manny Gameen says, any picks for the World Cup? I got to go with Germany. Like, come on. Like, you know, Klaus, fatherland. Like, you know, my whole family is from there. Like, I got to go Germany. Come on. Did you ever start a gold channel? I'm thinking after all these years, I'm in the wrong asset. I've done gold content before, but it just doesn't do well because it's not always sexy, right? And that's what people want. Hot, spicy, naughty, and relevant. Gold, don't get me wrong. I think gold is always cool, but it's not always hot, right? Like for a lot of traders, it's really boring. It's not that volatile. The run-up we've seen in gold recently is not normal. That's why there's a correction going on, because the run-up was absolutely insane. It just takes more time. Crypto can do a run-up like gold did in like a week or two. But it also can erase it in a few days. Gold just takes a little bit longer. Yeah, Trick says Germany, they have solid touches on ball. When you watch them touch the ball, their touches, they're just, they're crisp. They have the right amount of like effort, the right amount of rotation, the right amount of placement, the right vision. It's just, can they put it together for 90 minutes? I'm just putting it out there. 90 minutes. Waiting on the tornado in the Midwest, so they say. Let's hope not. Used to live in the Midwest. We had plenty of tornadic activities. Tornadic? I don't know. Fed coming up live. Waiting for them. It is 5 minutes until the Fed starts doing their thing, you jabronis and jabron ahs. Okay, the AI thing too. Let me ask you a question, okay? And this is when you have to start thinking about all these AI plays, and you have to start thinking about all these markets. Everyone's talking about AI this, AI that, right? What happens to an industry when a shit ton of competition comes in? I'll tell you, prices usually stay flat for a while. Normally, companies can get through this. The problem is with AI, you're not making money. So what happens is if you keep seeing more and more players enter this market, there's only so much demand for AI, and we see it's not there yet, but you're still flooding it with supply. right? Companies that are catering to the AI build out. Paul Schaefer says, what am I into? Banking stuff. I love my energy plays. I'm also a very big fan on, I'm trying not to be like too specific here because I don't want people to do what I do. Just put it that way. So yeah, energy plays, some real estate, but it's not what you think real estate wise. Very diversified, and other rando plays as well. Some mining stuff. Everyone knows the gold and silver usuals. Those are easy plays. A few ETFs that I've had for a while that are boring as shit, but they yield good. So diversified. Energy, though, is my baby. I'll tell you what I don't touch. I do not touch airlines. I do not touch travel. Those two things can get first by so many different things. There are so many external factors that can screw that up. I stay out of the auto industry. F them. They needed bailouts not too long ago. Just throwing it out there. Trick likes the shiny. I'm a fan with that. I love miners. I really, really love miners, mining companies. I haven't bought any recently just because they've been so crazy freaking high. But previous, buys have done very well. Just what are you into as well? I like oil. I like energy. So for me, it's exciting to research. If you like banking, there's a lot of good banking plays out there. If you like reading the books, there's a lot. Just put it out there. Fun. Yeah, you have to keep it fun. Kind of weird, but I heard all the roundabouts and that they're putting it in as something to do with the amount of tornadoes that we're getting now. I hope not. I hope the roundabouts aren't doing that. Yeah, the AI play, I just think it's tough. I just think it's a tough, very heavily saturated market. What was everyone's big thing in crypto? Was payments, right? Cross-border payments. Why? Well, because there's a demand there, a huge demand, and there's not a lot of suppliers that were favorable price-wise. So you saw a whole bunch of people go into the payment space because there's still a big market to capture and not much demand. And that's what a lot of crypto went to. The problem was they didn't use crypto for payments. They used stable coins for payments. Johnny Kinsman says, hey, Klaus, hope all is well. England versus Croatia. Any Pokemon slabs you're looking into? Yes, Lost Origins. And I did buy more cards not last night, the night before. Just putting it out there. AI robots, blockchain, it's all the future. What blockchain is positioned for robots? It goes deeper than that. Okay? It comes down to what segment of the population follows this tech flow and what segment doesn't, right? You and I know that not everything is first world. And even within different first world players, we have different first world ways of handling those situations, economically, politically, and so forth. So don't think that like AI blockchain is going to be like everyone uses it. Oh my God, we're all floating around in fucking spaceships and shit with Jetsons boots on. No. Some countries are just going to be old school. Just how it is. Culturally, that's how they are. Technologically, right? Theologically, you know exactly what I'm talking about. Godforsaken countries is how you doing. I'm doing all right. I'm waiting for this man to come on live. And when he does, I'm going to share it with you. Frankie D hopes we get clarity past. I do too. Deanne says, I don't know anything about Pokemon. I'm interested in investing in some card packs. Have zero knowledge about it, though. If you're going to get into Pokemon, my only advice to you is buy PSA 10 slabs. That's it. Get PSA 10 slabs. I'm telling you right now, if you want to buy something, buy the best of it. Everyone will always want the best of something, not the worst of something. I have a couple 1999 Pokemons up on that wall over there, okay, that are PSA 10s. They were commons. I didn't pay much money for them. They're crazy now. Why? Because everyone wants the best of whatever there is. So if you're going to get into anything, get the best of it. Doesn't matter what you're talking about. Doesn't matter what we're talking about. Get the best of it. That's what people want. Warsh in the Fed should be on here anytime. Oh, here we go.
Good day. It's an honor a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end, hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. And there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question, so let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else. That might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Brian.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first-order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third-order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve.
Steve Leisman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI, so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what the expectations for inflation being higher and also potentially growth being slower? So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then. And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that
instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Go to Enda for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rearview mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, we've had strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Wow. What do we take away from that? Holy crap. Dude was just, he was very direct. I'm down with him in all his data talk. I like all that. I'm cool with that. He was direct. I mean, like, seriously, he was just, and I will say, his whole thing on he needs good, fast data is effing 100% correct. Y'all have heard me talk about how would you drive your car if your speedometer wasn't accurate or if it was delayed by 15 seconds. It wouldn't help you, right? And what Warsh is saying right now is basically the Fed was operating with old, outdated, and not really usable data. So yeah, this is really wild. I mean, very different. He also said too, and I don't know if you picked up on this, earlier in the meeting, they asked him, and by the way, this meeting was short. 43 minutes, that's it. Early in the meeting, there was a question asked to him, and the question that was asked basically had to do with, are you going to continue the monthly FOMC meetings? And that's these meetings here, right? And he's like, if we have something important to say, we'll definitely do it. Otherwise, no. And I'm like, dang. I mean, wow. Like, this guy has no love lost for Powell. That has got to be some tense situations there. What really sticks out is honestly his harshness. Like, I'm trying to use the right adjective here, and I'm just struggling with it right now. But he was very direct, and not direct in a bad way, but direct like, I'm not answering that, or, you know, I don't do forward projections, or we might not have meetings. It just seems like he's trying to take the Fed in a whole different direction. Ray, BX Kid says, hawkish or dovish? I would say this was neutral, neither. He talks about trends. Trends are important because the trend lately has been bad inflation. But he also acknowledged inflection points. I wouldn't say he was hawkish or dovish. I think this was more just almost like a let me introduce myself sort of meeting. He didn't provide any forward guidance, so that kind of rules out like a true hawkish or dovish tone. He's more like, hey, we need to get data right now. We need to make decisions right now. A dove in hawk's clothing, maybe. I mean, different vibe with this dude. And I think maybe that's going to be a little bit hard for us to swallow. Yeah, he was firm. Thank you, Martine. Seriously, firm. That's honestly great freaking adjective on that. Firm. Neutral was a good way to put it. He's like, hey, I didn't put my dot on the plot charts. You also notice he didn't even talk about it. He didn't even talk about the dot plot thing really at all. He just kind of glanced over it. So yeah, very different thing. It all comes down to what? And Nikki said it. Need to see the results. So true. You gotta see the results. I have a feeling he's going to be a little bit more direct than Powell was with the press corps, right? He's going to be basically telling them to shut the F up, not maybe in such eloquent ways, but you get my points here. In control, Lauren, yeah, that's a good one, right? I mean, y'all are coming up with some really good adjectives for him. Definitely different than Powell. A little bit more of a sense of urgency than him. A little bit more, maybe it's either A or B, not somewhere in between, right? Action, though, speak louder than words. He talks about all these, special, reform stuff. Yeah, I'm not a fan of that either. But if you're reforming something that isn't working, that makes sense, so I get that. Just different vibes. This dude had a very different vibe. In terms of the market's reaction to it, like I said, you were going to see some wanky things going this way, that way. Just give it some time. Just come back to the charts in like a day to see what's going to go on. It just very different. Very, very different. And he even said, though, too, like the Fed has to become credible. The markets have to react a little bit more to the Fed. And I agree with him on that. I totally agree. The Fed lately has just not held the same prestige. Kind of a problem. Other than that, I don't know what else to tell you. I mean, this was a very different meeting. AI mentioned several times. Crypto not mentioned once. That's another interesting story because he talks about the supply and the demand lines, right, of AI. Basically saying, hey, look, they're going to meet sooner or later. And you don't know, though, if that's when the supply is high or low, depending on, if the market's big or not. He's a bit sassy. That's a good way to put it. I like that. He's not a Grateful Dead fan like Powell. Okay, I get you there. I think he looks like when the Beastie Boys did Sabotage. Hold on, here. Y'all are screwed now. I'm the one controlling this stream. So let's do this one. Let's go Beastie Boys Sabotage. Okay, we're going to do this. We're not going to get demonetized. We're going to do this. We're going to make sure that the music is off. We're good right there. And what I want you to look at is, I got to find the right one. Hold on. I'm going to try to find it. Doesn't he look like these guys? Right? Just get rid of the stash. You know what I mean? Help me. Right? Come on. Get rid of the stash. Chop the hair down a little bit older. Right? Come on, give me that. Give me a little Beastie Boys Sabotage. He looks like one of them, right? Like he could be like in an old Caprice squad car. Yeah. This is Sergeant Roberts. Works for the Chicago PD. Come on, guys, gals, help me out with that. Sabotage, I'm telling you. It's there. Oh, gosh. He looks like Ross. Yeah, someone said that too. Like an older Ross. I think it's the Sabotage guys from Beastie Boy. They got a haircut. They got a little bit older. They got rid of the cop stash. And this dude back in the day drove like an 84 Caprice. For real, man. For real, he drove an 84 Caprice. Just putting it out there. Other than that, I guess it comes down to we'll see what inflation says. We'll see what the numbers say. And we'll see if any of this brings any spot action to crypto. There really wasn't much movement in the markets. Klaus, can you we've got a task force for that mug. I'm sure I could come up with something, man. He does look like an agent, I will say that, but I think sabotage is where it's at. Let's see. Let's not set expectations for future rate cuts or increases. Guy kept putting that in. That's going to be something the market's going to have to digest as a difference, right? What did I tell y'all? I said, if you take a big role in leadership, don't change shit. Just observe for a while. Well, he kind of changed shit, but also didn't at the same time. He basically said he's not going to be showing any forward forecasts on his own point. He doesn't see the point of that. That's interesting. The market's going to have to digest that change. What are y'all's thoughts? I mean, I'm reading the chat right now. Young Harrison Ford, no, young Harrison Ford, no, I can't let you have that. He's like the strict parent. I like the salt and pepper hair, just putting it out there. I do like that. I mean, he's clean shaven, I get it. No glasses. He probably wears fucking progressive contacts. I don't know. Lauren asked what color's the new mug, and that's right. Guess what I have in my house? During the live stream, dogs went absolutely effing nuts. You know why? The UPS person came in, and they delivered the new merch. There is Choo Choo Bitches mugs in stock. I hodl because I can in blue and white. And in 1 week, I should have the red and white ones. It is the same design. Instead of blue and white, it's red and white. And it's going to be the I Say Lots of Naughty Things and Here's Your Warning mug. There you go. The best friend of Ferris Bueller. Oh, okay. Let's bring up some Ferris Bueller. Do you think he's the man in the Gordie Howe shirt? I don't know. Let's find a good photo of him. Here we go. You think? Okay, let's look. I got a photog coming up. What do you think? What do you think about this? Is this him? Come on, help me out. Him? That's pretty fucking good. Who came up with that one? Who came up with the one from Ferris Bueller's Day Off? You are a freaking legend. I think that's pretty close. I think that's really close, man. I do. Here, look. I'm gonna be really cool. We're gonna do this. We're gonna shrink this. We're gonna move this over here. We're gonna put Ferris's dude up here. We're gonna get rid of this, and we're gonna put that right here. I think someone's a winner. Someone that is pretty effing close. So whoever said that, you are freaking awesome, by the way. Okay, I'll give it to you. Oh, man. So, yeah, that's what we went with today. We went with the Federal Reserve new head Warsh. As you see in XRP, take a little bit of move to the downside. Overall crypto market also taking a move to the downside. We was pretty good at Bitcoin at 65,000. Have since seen that slip here a little bit all week. Black gold, well done. Seriously, well done. Well done, Black Gold. I thought that was really cool. Philip Ryan says, do some cool fridge magnets. My daughter and I are working on that and shirts. For those of you that don't know, it's my daughter and I doing all the merch. Yeah, for real. We're doing everything. The packing, designing, all that kind of fun stuff. There's an email pinned up at the top. If you want merch, email me at info.cwkmedia@gmail.com. It should be pinned at the top, right? If you want to get in on the merch, that's where you get it. So we're working on stuff. Trying to keep it hot, spicy, naughty, and relevant. Let's see here. Look at Bernie on Bernie's Best Weekend movie. No, I'm telling you, I think we got to give it to Cameron. We got to give it to Cameron for Ferris Bueller's Day Off in the Gordie Howe jersey. The hair is closer. The face structure is closer. Yeah, just putting it out there. I'm giving him the benefit of the doubt. Excited for the future. That's from the Garrett Mendoza. I'm the same way with everyone. Y'all know this. I don't care if you're Democratic, Republican, what color you are, what planet you're from. You could be a green alien. I don't care. I'm all about performance. Prove to me that you're doing a good job, right? For me, it doesn't matter your background. It doesn't matter your beliefs. Are you performing well at the function that you're appointed to? Other than that, I mean, I'm just kind of shocked. Just throwing it out there. Dean says, so when's the next time you're live or any big events you're going to go live for? I obviously am going to do CPI data. I'm also going to start touching on some of the election stuff. There's a couple crypto people that are moving forward, right? They made it through primaries. That is a freaking really good thing. So I want to start covering that kind of stuff. Congrats on beating the Dodgers. Thank you very much. White Sox stick 2 out of 3. Thank you. Other than that, I think, yeah, that's when I'm going to be doing the lives and so forth. Let's see. Do y'all want to do a summary video live? Want me to do one live? I can try to do it. If y'all are interested, you could see if I can like freehand one. Maybe that would be a good way to call it, or improv it. I think we could do that. You want to do it? Let's do a summary. All right. Here we go. I'm gonna change this up here. We're gonna do this. We've got red in the tech sector. All right. Kevin Warsh just had his first meeting as the head of the Fed, and he blew away expectations. Or did he? Because he even said at this meeting he will not be providing any forward-looking expectations. He wants the market to get more data. He wants that data to be timely so that the Fed can use the data and so that we can use the data to make the best decisions for all of us. Task force, he's got them. You got a question for him? He probably won't answer. This is the new head of the Fed, Kevin Warsh. Now, the problem is, though, is the market so far is reacting negatively to this action. Unfortunately, BTC broke 65,000 during that. Spot volume for crypto has been absolutely garbage-eronian. Well, we didn't see really any spike during the meeting. Now, he did give his usual, here's my dot chart and plot chart, but he didn't post a dot. Why? Because he doesn't want the market to be spooked either way by how he's thinking. There's these dates that I have up on the screen. You can see them right now if you know what I mean. That was fucking really Dr. Seuss sounding. This is pretty good. July, September, October, and December. Days with what? Meetings and rate cuts with the Fed. When asked by the press, hey, dude, are you going to be doing meetings? He's like, I don't know. It all depends. Do we have something to say? Something important? If we do, we'll hold a meeting. And if we don't, well, that's it. So what happened was Warsh came into the Fed and changed things up. By what? By giving the markets less guidance, asking for stronger, stricter, quicker data, by dismissing questions very, very quickly and saying he's not going to talk about any future-looking action, saying that, you know what, we might not be doing these press meetings all the time. Interesting. So now what? Well, now we wait to see if this man and the rest of the Fed can improve on things. Because, see, that's what this is all about. Can you improve? What is the best quote in the world? And the best quote in the world is from Mark Twain. And he said, continuous improvement is better than delayed perfection. And if Warsh can improve the Fed, well, then there's nothing wrong with that. If after a few meetings, a few months from now, we go back to this and we say, hey, things are worse. We don't like the lack of forward projections. We don't like the way the data is being collected. There's too many changes here. Because remember, what the United States does, a whole bunch of countries do. So if the Fed in the United States decides to drop rates like that, guess what, girlfriend? A bunch of other countries will do the same. So it all comes down to when we zoom out or maybe take a step into the future and see what the last several months in meetings look like with Kevin Warsh. Because he started off his reign already making some changes. Yeah, I get it. He looks like Cameron from Ferris Bueller's Day Off. Shout out. If you were live streaming it, you know what's up. But the deal is talk is cheap. He said that AI has got a kind of supply and demand dynamic going on. Basically right now saying there's a lot of money being spent on AI. Look at SpaceX, wink, wink, nudge, nudge, 2025 capital expenditure of $12.7 billion just for AI. But is the demand there? There were several questions about AI, but there wasn't a single question about crypto. Now, crypto, just remember, as a market is much, much smaller, right? I mean, like the amount of money involved in it, it's just smaller, and we have to respect that. But we also have to respect anyone's time in a new position, because it's going to take him time to find his rhythm. And yes, we're going to have a task force for that. That was his big tagline of this whole thing. So was he dovish or hawkish? No, he was more matter of factish. The market's reaction, though, as of now, has been a bit more negative. Were there people out there expecting rate cuts? Oh, I sure as hell hope not, because check it out. We're expecting rate increases. And remember, it's not just Warsh that has a say, but a whole bunch of other voting members at the Fed, and a lot of them think that rates are going to be higher for longer. In fact, look at 2027. That's not a bullish looking plot chart right there, is it? No, it's not. So now a new Fed, a little bit of uncertainty still left in the Middle East because we don't have a deal finalized. Clarity Act is running into some time frame problems here. You've got SpaceX pulling some liquidity, Anthropic coming out, AI and other players still sucking the money out of the markets. But there hasn't been the yield for it yet, right? We haven't seen the juices come from it. What does that mean for crypto? Other risk markets out there? It means we're going to have to wait and see what this guy does. Because as of right now, he is extremely neutral in his stance. And you know how Powell said the data is going to tell you what way to go? This guy is saying we need to get better data so we really know where to go. It's time to upgrade from dial-up to fiber optic, or whatever analogy you want to use. So right now, all eyes are on this man, and all eyes are on inflation. Hopefully, okay, things ease up for us. But as of late, it hasn't. It's been pretty spicy in a bad way. Not the wife coming home, oh, I'm going to give you a spicy night. No, spicy isn't bad. Spicy is inflation going up. Housing up, foods up, beverages, cars, you name it, freaking up. Energy up. We got a lot to chew through. So that's the first meeting for Warsh of many. We'll see if he does a meeting next month, because I'm assuming if he pauses for a while, he's probably not even going to do a meeting. That can itself can shock the markets. So choo-choo, what? Well, you know the deal, lemon peel. I've got merch in. If you want merch, it's linked in the description down below. Shameless plug at the end of a video done while live streaming as the audience is there watching, and I'm sinking you right here. I see a lot of W's up on the screen. And choo-choo bitches. Oh, what do you think? Pretty good, right? I pretty much covered everything that was important. I just thought I would throw that out there. I also think July 4th is a no-go. To be honest with y'all, I really thought that once we got through March that we were done. That my honest expectations was that once we got past March, I didn't really think we stood a chance. That wasn't me being pessimistic or anything like that. It's just, you have to remember the politics game in D.C., there's a lot of players that don't want Trump's family to succeed, and Clarity Act helps his family succeed. And the other problem you have in D.C. is just a general, slow pace, right? Slow pace. Even if the whole Trump thing wasn't involved in crypto, there's still a slow pace of getting shit done in DC. None of us want daylight savings time and that like shit to change. No, we want the same time. We want as much daylight as possible. End of story. They're still trying to fit it in a bill. Come on. It takes time, and that's part of the problem. Part of the problem. Dean says, good summary. Thank you very much. Thank you. Appreciate it. So let's do this. We're going to take the stream. Let's go. Stream ends at 3:40. I'm going to try to get another workout session in before I go lift tonight. Stream 3:40, ending time. Get your cues and comments in now, you jabronis. There you go. Is that Washington, D.C. or Washington, D.C.? Well done, Jay Stanley. I like that. I like that. Cameron, I'm telling you, I think Cameron's the winner on this. The Dow did tumble like 300 points. The market's like guidance. It's true. And you know what? Like Guy Kemp, I'm going to talk about this one. The markets don't like change. Right? They don't like change. Right? A lot of people don't like change. So the Dow's reaction to Warsh changing things tells you pretty much how the market feels. The market can digest a lot of crap. It's just the crap that it has to digest has to know it's digesting. This is a new thing of crap. Look up Ray Barone. All right, here we go. Ray Barone. Yeah, I mean, I don't know. I think Cameron takes it because that's Cameron as he's older. I think that's the best one. I think Cameron's got it, man. Cameron's got it. Thank you, sir, because we can appreciate it. Phil Bryan said the live was great. Hopefully y'all liked it. I'm bringing you the news, good, bad, happy, or sad. We're going to talk more about dividend plays in the future. I'll do more dividend videos. If y'all really like that stuff, seriously, I'll do more. We're going to talk more about other options in crypto. We'll talk about derivatives. We'll talk about a whole bunch of stuff. Hopefully spot volume comes back. Let's see. I'd be interested if you did videos about collecting Pokemons and what you think is worth going for. Videos on exciting upcoming things that will do well in the stock market. I think we could do stuff like that. Let's see. Did you get a Polygon bike yet? Was thinking of getting a budget model. If I go Polygon, I might. I don't know if I want to go Stratus or Helios yet. I have 2 endurance race bikes. Part of me wants to go all out and go, what is it, like the S9? The S9X? I might go all out. I don't know. I'm just throwing it out there. Do an NVIDIA video. Ooh. Lauren likes tips and stuff like that. Here's a tip for you. Whenever a new industry opens, don't get caught up in the hype for too long, okay? It's okay to get caught up in the hype. That's what happens with the new industry. When the dot-com bubble happened, everyone was making tons of money, right? Because it was more money and investments flowing in. But the reality is hype fades. And when hype fades, you still have to perform. Okay? With AI, we're getting into that phase here where a lot of investment money is starting to be like, okay, we've given you money for a couple years. When are we going to start seeing a return? We're in that phase where people are starting to question it with AI. All right? Crypto, it's the same thing. There was a lot of oomph, a lot of enthusiasm. Then it was like, all right, you got to perform and you got to do something with it. And people are like, oh, okay. So just remember, anytime you get a new product, anytime you get a new like sector, a new mini economy, a new something coming out, it's okay to get excited, but don't get swept up in the excitement where your emotions cloud your judgment. Is there really a demand for that product? Is it a profitable product, right? It all comes down to demand and making money. Let's see, dividend plays. Yeah, I think we should do more divvies. Jay says later. Klaus, later to you, Jay, and thank you very much, kind sir. I want to find a solid dividend pay. Yeah, I've been talking a bunch about the divvies. I don't like STRC because I just don't, long term, I think it's super risky. It's super risky for only getting 4 percentage points more than a boring ass energy play that's been paying for years and years and years. Where's our Pop-Tart video? I know. I keep telling y'all to believe, or to keep bugging me. Keep bugging me for it. Keep bugging me for it, trust me. What are the chances XRPL and stable coins are used and XRP is never used as liquidity. Most of what you're seeing XRP used for is gas fees, right? Yeah, some people do the liquidity pool things, the automated market makers and stuff like that, but like, it's not the same oomph that it was pitched as. Remember, it was, XRP and XLM for payments. That never happened. They're mostly gas fee things right now. And even so, the burn rate still kind of sucks. Stablecoins, honestly, they got the Genius Act. And as soon as that happened, they started stealing the show. Guys, says later, Klaus. Thanks. Thanks, y'all. I'm going to play some tunes. You know the deal. Hang out and chat a few minutes. Choo-choo what? You know the deal. Let me pitch, bitches.
It's just